Inflation in a very strict sense means monetary-based expansion faster than the actual economic output. Beijing wants to make sure is that this economic downturn doesn't get any worse. Otherwise, you're going to start to see riots on the streets in China. China also is playing a hard ball right now, but they're not going to do it for too long.
This material is for informational purposes only and is not intended to provide accounting, legal, or tax advice, or investment recommendations, or an official statement of Presto or its affiliates.
Hello, this is the Presto Research Podcast. This is your host, Gio. Today I have Peter and Rick today. What's up, guys?
Hey, Gio.
It's a bloody day. Today we're recording this. The US 10-year Treasury is going crazy. I'm not a good macro guy, but it seems like it's a very unusual thing to happen when like these things are supposed to happen. I think a lot of people are expecting the bond rates to go down, but they're going up. So a lot of people are questioning why this is happening. A lot of people are saying China is dumping their bonds, whatnot, but I have no clue. That's why I have the professionals here. And I gotta ask the first question. So a lot of people are comparing this tariff thing, the Trump tariff thing, to 1930 or maybe 2019. I disagree with how it's they compare it with 2019, but they're saying, oh, it's like the new Great Depression and all, but I have no clue. So you guys got to teach me, like, are we going to see a Great Depression? What similarities or differences do we have from 1930 from now?
Yeah, maybe I can start. So it's very chaotic times and a lot of uncertainties. And I think in times like this, people like to draw a very simple conclusion. So, this is like year such and such, and therefore you're going to be like that. I think we should try to refrain from that temptation. I mean, we can certainly take a look and study what happened at that period, but should resist the temptation to just jump onto the conclusion that because this happened in that year, same thing's going to happen this year. Because the world is a very complex place. It's not like simple software where you have an input and then you get automatic output. It doesn't work like that. So that's first thing. The second thing, more specifically to your question about comparing it to 1930s, I think what happened then was what caused the depression was not the tariff itself. Tariff has exacerbated the deflationary pressure of the economy at the time. But what really kind of triggered it was the 1929 stock market crash. And the reason why it happened was there was a lot of leverage built up to drive up the stock price in the 1920s. And there was a lot of bad investment made. There was a lot of overcapacity. And all these things has to be unwound. The trigger was as I said, 1929 stock market crash. So, so we shouldn't point the finger at the wrong culprit, because what followed after that was because people were losing jobs and everything. The U.S. decided to put up this tariffs around the world, and then that kind of ended up having the opposite effect of worsening the situation. But that wasn't the direct trigger. And also, another thing I want to mention is U.S. at the time had also somewhat understandable kind of situation that they wanted to resort to tariff, because throughout most of the history, U.S. history until that point, U.S. was operating under the tariff system. So, U.S. was at the time, very young country. You can call it like sort of emerging market at the time. The developed market at the time was Western Europe. U.S. was a young nation without much industrial base. So naturally, as it often happens in other emerging markets today, U.S. also had the tariffs to protect and nurture their own industry. So they had something like 5 to 10%, I think, the blanket tariff across all goods and services. And then slowly, starting from maybe early 20th century, they started to bring down the tariff and then replace it with the income tax. Because prior to that, also, they didn't have an income tax, believe it or not. Right now, it's like a 50% income tax for some very rich people. But, in the early 20th century, up until early 20th century, US didn't have an income tax. So by 1930s, the tariff was still very fresh in their memory because it's only been like maybe 10, 20 years that since they got rid of tariffs. So it was very natural for them to like bring it back when they were going through economic hardships of the 30s. Today, it's a very different story, right? I mean, like, the US has been advocating free trade for a very long time, especially since the 90s when Clinton administration kicked off with, what back then was known as a NAFTA, North American Free Trade Agreement. And then also they pushed for China to join the WTO as well. So the world became much more integrated place that tried to promote free trade. I say try to promote because not everybody actually, got on with the program because not many, like a lot of other countries continue to maintain tariffs and some non-tariff trade barriers as well, which is what I think, what Trump is so angry about. Anyway, so that's, the whole setup is very different when you compare today's environment versus, what was happening in 1930s.
I was going to say the exact same thing Peter did. Well, Peter had the privilege of being alive back then. I wasn't born yet. So, it's hard for me to add. But I didn't realize the macro bloodbath. It wasn't on my watch list. So I just saw now. That's crazy.
Yeah, I went through the Great Depression. Yes, as a main dude, very good.
Look great though. Yeah.
Anyways, seems like it's a very different time right now comparing to U.S. policy then and now. But I think there's still a lot of questioning too. Also, what are the true motives behind these tariffs? Last time, Peter, you said it's about national debt. But I have slightly different opinions, but I would like to listen to Rick's opinion on this first. What are the true motives behind the U.S. tariffs against the world?
Yeah, okay. Well, first, I think he has a very weird understanding of tariffs. Like, I don't want to say if it's stupid or smart or anything, but I think it's different. Like in the Truth Social post, he's called it a financial deficit with China, like those exact words. And I think that reveals kind of how he thinks. And I think fair trade to him is like fair elections. So it's about winning or losing. So if he's losing, then it's rigged against him. And I think he really believes that. So he said in an interview that a bilateral deficit is a loss. And I think that's like his formula in his mind. So how everyone criticized the tariff percentage formula, like over the weekend or last week or whatever. I think it's not a reflection of like his advisors, as everyone said, but it's just a reflection of Trump's delusional view of how like trade or fair trade works. And I think it makes sense because if you look at everything he does, paying for things is a loss to him. So if he pays for it, it's bad. That's why he doesn't invest anymore. That's why he licenses his name out, like Trump Hotels and the Trump brand, and he creates rugs and crypto. So like his life is about taking a spread, and so if you buy, you're losing. So I think that's like rooted in everything. I saw an opinion that he wants like a COVID shock, like zero interest rate environment, QE, repeat of 2020, 2021. But this time the Fed isn't really involved. But I think a systemic crisis will bring them to the table. So I guess that's what he could be doing. But as of now, I think there's no real good outcome for Trump, because I think either he like caves or Congress steps in and takes tariff powers or whatever, and the only really good macro outcome is like Congress or Supreme Court actions now. So yeah, I think what he wanted to do, if you view it in the lens of doesn't really understand how trade works, and it kind of makes sense. I think the optimistic view is that Gallo's Kevin opinion, where you just want to create a big enough shock to create change in like very simple terms. But then you kind of have to assume almost like that bell curve super genius or super smart opinion of Trump, which I don't know where I stand on that. So I kind of just stop at what his understanding of fair trade is. And when I look at that, it seems like he views it in like a very winning or losing situation, just like he did with fair elections. It's either 1D or 5D chess, and we can never tell. But I think he's feeling the pressure now, like from GOP as well. I saw like oppositions piling up, and it makes sense. Like you're GOP, you have depopulated backers and CEOs and stuff, who are all calling their political connections. I don't see how the GOP doesn't just cave to that pressure, because basically by not doing anything, you're biting the hand that feeds you. Basically, if the GOP doesn't do anything or the Senate doesn't do anything, they're kind of screwing over their own backers. And I don't think that's something that will happen, like continue to happen, because allowing this madness to continue is destroying like the wealth of the people who are your benefactors. And basically every CEO and every interview in the past week has been very against the whole tariff situation. So I don't see how they don't start putting more pressure on Trump, like publicly as well. Because if they don't, no super PACs, no cushy like lobbying jobs, no consultant jobs after Congress, no 50K speaking fees, like all of that is dependent on you pleasing your backers. So I think the pressure starts mounting soon.
I mean, I think I don't necessarily have a view on whether what Trump is trying to do is gonna work out or not. But I know what I think I have a somewhat, I have some understanding of what he's thinking, why he thinks this way. I mean, he is thinking this way because, from his perspective, the U.S. over the last 30 years has become very polarized between the people who have benefited from the so-called free trade system and people who didn't. The people who benefit from it are usually, top 10% of the population. They are people on the Wall Street, people on the West Coast, entrepreneurs, well-educated, they benefit from like all the asset price rises, the stocks, real estate, so forth. And then there's people that kind of, lives in the middle of the U.S., so-called the red states. These are the working class people that, these are the people who used to provide laborers for a lot of manufacturing industries in the U.S. That got displaced because of the hollowing of the manufacturing base into other countries as a result of so-called these free trade arrangement with other countries. And these people didn't have a voice, I think, for the last 20 years. They lost their jobs. Sometimes entire town was just disappeared. And family disintegrated, and I think no one really paid attention to them for a long time until Trump came along, and he started to pay attention. And look, I'm going to listen to you. I'm going to look out for your interest, and that became Trump's support base. So when you say that all this mayhem is like hurting people, I think we need to specify exactly what type of people are being hurt. Yes, if you're the Wall Street people, Wall Street bankers, or the entrepreneurs with a big shareholding base in these big techs, yes, you're suffering. But if you're talking to these the middle, well, not necessarily middle income, but like these working class people in the U.S. That has been struggling. Not so much. In fact, I hear that they're actually cheering for Trump, and then his support base, I think I mentioned it last time, is still pretty high. Although I heard it came down a little bit recently, but still like a 47, 48, 49%, something like that. I think there are some people who actually thinks that that approves, that supports what Trump is doing, and we just don't hear about it because the mainstream media don't never go and interview these people.
I think the whole tariff thing, I think he's I'm not sure if it's like his whole, like this whole thing, it was all created and was ideated by Trump, but I think the war machine is rolling right now. I think this whole thing is about war against China, because when you look at how war happened in the past, Hitler literally said he's going to invade these nations around him, and he did. But nobody was like saying they're gonna actually do anything about it. They just told Hitler to stop, bro. Like, don't do that. Like, that's bad. But he just did it anyways. China is doing the literal same thing. Like, they're saying we're going to invade Taiwan at one point of like in the future. So if Taiwan is so important to the U.S. and as a manufacturing base for their chips and also a strategic location in the first island chain is, then I think the U.S. needs the manufacturing base to come back to their homeland, because what I've seen is that the manufacturing capacity, it's unmatched. Literally, like China can create like, I don't know, like 100 times more ships or whatever compared to the US, even though the US has much more, let's say, aircraft carriers or, you know, these things that are floating around the ocean. What if they're all destroyed, right? So they need some sort of manufacturing capacity to counter the Chinese threat. And also, I think this is like it's an extension to how the U.S. is trying to react to the Chinese threat. So these tariffs, it's like the U.S. is literally saying that we are not going to take care of the world anymore, and we want to only face China at the moment because that's all we can do for now. That's how I see why these tariffs are happening. Like, I don't think this is like this whole effort is made by Trump only. I don't believe in that, because policy, there are these unelected bureaucrats and these secret agencies that do a lot of weird things, and history kind of proved it for the last few, like the Cold War. We had weird things going on, like people drug people with LSD to like see through, like, I don't know, they did weird things, right? So yeah, that's what I see. I see this as an act of war, basically. So I'm actually kind of concerned. So I don't even know what to buy. I'm like, what if the dollar even dumps? Like, I'm actually looking for, should I buy gold? Like, what if gold isn't a good choice? Like, so should I buy, you know, energy ETFs? Like,
I'm surprised you said gold instead of Bitcoin.
bro,
Should we?
I mean,
if we change the podcast directing?
We gotta invite Peter Schiff instead.
yeah, but Bitcoin, you know, back when Ukraine was invaded by Russia, it dumped. So I don't think Bitcoin is like, it doesn't have the characteristics as gold right now. So I wouldn't be sure to park my money in Bitcoin when, you know, shit goes down.
You know, when there's a judgment of whether Bitcoin is a digital gold or safe haven, it cannot be made based on daily, weekly, monthly movement. We have to look at it long term. It's not the only thing you see over the short term is just the price volatility. It doesn't say anything about the nature of the asset. The nature of the asset only manifests itself over at least 4 or 5 years period. So I think that's another temptation I think people should like refrain from, is to just jump onto the conclusion looking at very short-term price actions in the market, because the short-term price action doesn't say anything about the true intrinsic nature of the asset.
Yeah, it's just positioning. I mean, a lot of people said that for the treasuries as well. Like, people needed to dump just whatever they had and whatever was liquid. So it's hard to look at daily stuff. So that's what I say with my portfolio too. You know, when I'm down on the day and week and month, I just look at the 5-year Bitcoin chart, and then I think I'll be okay. We'll see. So far doesn't seem that okay.
So Peter, what do you think the impact on the economy will be due to these tariffs?
Yeah, so first of all, just a disclaimer. I'm by no means a tariff expert. It's a topic that I think a lot of smart people spend a lot of time studying on, and I'm not that person. What I say here is probably very amateurish take on its impact. But having said that, I think there's one thing that I can say for sure about the impact of tariff, and that it is that it's a very complicated process. There's no simple binary answer to what tariff does and does not do on the economy. It doesn't happen in vacuum. There are a lot of other factors. So, for instance, people often say that tariff causes inflation, but I think even that is not such a simple conclusion. First of all, we need to define what you mean by inflation here, because inflation, in a very strict sense, means monetary base expansion faster than the actual economic output, and as a result, money losing value relative to the goods and services. That's not what happens when somebody imposes tariff, because tariff doesn't do anything to the monetary base. And so I think what people really want to say, instead of inflation there, I think is that tariff can cause price levels to rise. It's two different things. Price level can rise as a result of inflation, but it can rise also for many other different reasons. For example, like a supply chain issue. If you have a bottleneck in the supply chain, that can cause price to rise temporarily until you fix that supply chain bottleneck. So I think that's what people want to say, that the tariff can cause price levels to rise. But even that, I don't think is a guaranteed outcome because, like I said, because tariff does not happen in vacuum. Also it's a function of three things, basically. For one thing, it depends on the relationship between exporter and the importer, and also the nature of the merchandise in question. So, for instance, if the exporter wants to really desperate to get the goods into that importing country, maybe exporter will foot the bill and pay the tariff, and doesn't force the price to be passed down to the consumer at the end at the other side of the transactions. Or maybe the importer is making so much money, maybe they are enjoying a huge margin. So maybe the importer will, if the importer is willing to, maybe make a compromise on their margin a little bit and pay tariff and doesn't pass down the cost to the consumers, then again, it doesn't lead to the price level to rise. So only time it rises in prices is because either exporter or importer decides that they're not going to pay the tax and they're going to make the end consumers to pay for it. So it's only one of the many scenarios where actually the price end up rising. Just one illustration to show that there's no guaranteed outcome when somebody imposes a tariff. And also, it's a function of substitution. Like if you can turn to another country to find a replacement, then maybe it doesn't lead to a price rise. Although I think in this Trump's case, it's a blanket tariff, so I don't know if they can actually find any alternative country to import from. Also, there's a question of exchange rate as well. So if the exchange rate kind of adjust. For instance, if in the case of China and the U.S., if the yuan depreciates as we are seeing right now, maybe importing country can get more goods at a cheaper price, and they can afford to pay the tariff without passing down the cost to the end consumer. So it's there's no guaranteed outcome, I think, with the tariffs.
Do you have any opinions on this, Rick?
Not in a cheap way. I agree, because I was just looking at 10-year inflation tips, and tips are down quite a bit, and they're basically unchanged on the day. Then they sold off a little bit. So you can tell the whole story is on rising bond yields and not really inflation. And then if you go back to what Peter was saying, if the prices are going up and people expect prices to go up, but it's not inflation, you can kind of separate those two things. And I think the yield on both kind of show it, which kind of means it's like a tax on people, so it's not great either. But yeah, I mean, 30-year yields went up a little bit, not as crazy. So maybe that's like supply side inflation expected via tariffs, or maybe like increased fiscal deficit. But yeah, I didn't realize that tips were down so much on the year. The yield was down so much on the year.
Yeah, maybe we need to explain what tips is for those who are not from finance. I mean, how would you explain that?
Yeah, Treasury inflation protected. I'm gonna need to Google it. Treasury inflation protected. What's the
inflation protected securities? I don't know exactly what, but basically it's a bond that whose value is protected from the inflation, from the CPI. Basically, I think they use the CPI, I believe.
Yeah, and then annualized. Securities. Yeah,
security. Yeah.
So making sure.
Yeah. So basically, what by calculating the spread between tips and the regular underlying spot treasuries, you can get an implied inflation rate implied by the bond market, and that rate, people use that as a kind of gauge for market's expectation of what inflation is, and that I think there's a various time period that you can look at: 2-year, 5-year, 10-year. But I think the one that people look at the most is the 5-year 5 forward curve. 5-year 5 forward, the implied inflation rate, which has come down quite a bit since the Liberation Day, basically. So what that tells you is that the market is expecting like a very drastic economic slowdown, and the inflation rate come down as a result of it.
Right.
Yeah, which is quite surprising. I mean, I probably should have known what was happening, but I didn't realize the difference was so much. And people look at like the difference between the same yield treasuries versus the break-even inflations, and
yeah,
I mean the gap is widening quite a bit. So it kind of puts an end to a lot of the arguments I saw on Twitter that like, why were yields up? Like, oh, 2 different directions, it's being pulled in, fears of a recession mounting, but tariffs raise the prospects of stickier inflation. But yeah, if you see tip rates, and it kind of tells you what Peter was saying about separating prices going up and expectation of prices, which can be driven by many things. So this could just be like global supply chain shocks and stuff, not just pure inflation, which I think this combo is bad for people in the long run, because it's like taxes people.
Yeah, right. I was actually thinking about, since I have no idea how any of these things work, I was like, oh, what if we're going to get higher prices and lower growth, which is, in my definition, is stagflation. So I was like, actually Googling what to buy. I was actually not Googling. I was actually asking ChatGPT, what should I buy? And he told me.
What did ChatGPT say?
Energy ETFs, food ETFs. He said gold is like a second priority. Like the best is energy and food. So I guess
energy drinks. Energy drink stocks.
Yeah, probably some Red Bull. But jokes aside, let's say we do get tariffs, then what do you expect to happen to Bitcoin prices?
I'll go back to what Peter said earlier about separating short-term noise, short-term price action, which is driven by flows and positioning, and a lot of these things that don't influence long-term direction from the long-term direction. But it's also a lazy answer, because I can kind of use this to say anything about Bitcoin prices, because over the long run, it has gone up. But I think right now it kind of makes sense to use this, because we're kind of pricing in, equities and rates are kind of pricing in a pretty bad case scenario. And so if we add in any expectation or possibility that these things, the main issue of like risk selling off, the tariffs get sorted in whatever way, or it just ends up not being as bad, and 105% tariffs on China isn't sustained, or and something breaks or someone yields, then I mean it's good for risk. So I think now it's like peak uncertainty, and I think everyone's talking about how bad the uncertainty is, and there's no certainty. So if you include that in the formula, I think it's good for Bitcoin. But I'm also have the majority of my net worth in crypto, so a lot of it could just be hopium.
Yeah, that's a big bag bias right there. I'm actually
Yeah.
like the polar opposite from you. I have like almost all my portfolio in cash right now. So
that's why you look healthier and you're smiling more and you look fantastic, and I feel not as great.
yeah, I'm just flourishing, moistured in my lane. Yeah, so I'm expecting a big bear market. Like I'm actually thinking like this could, if we get like the worst outcome, it could be like a year or maybe 2 year bear market like we saw at the end of 2021, and then slowly creeping up. That's why I'm not trying to get into, like, I'm not trying to grab that knife. I'm not trying to kill myself in the markets right now. It seems a very bad time to actually make any judgments. Like you guys said, short-term price action, it's so uncertain, so having no position is the best position in my opinion. What do you think, Peter?
I mean, I think when we talk about the impact on BTC price, it's important to define what time period. So I think most people ask in terms of maybe very short term, maybe 3 months, 6 months, something like that. For that time horizon, I think it can go through some more volatility. I think until there's some clarity on how this trade dispute is gonna get resolved, and I think the most important one is the one against China. And maybe, who knows, it can come to a resolution tonight. I think tonight is the deadline, right? So maybe something will come up. I don't know. Maybe in the 11th hour. Who knows? But I think depending on, imagine that China somehow comes to the table at like a 10 p.m. tonight. There's a headline saying that they started talking. I think market's gonna go through the roof, I think, immediately. But, who knows? I mean, no one's, it's very uncertain. No one can predict that. So I think that's why a lot of people are just very, very nervous. And maybe they, even if it doesn't happen tonight, maybe, I think eventually they will have to come to the table and discuss, because I don't think either side stands to benefit from this standoff. So I think it's a matter of who's going to blink first. And I think, I also, just going back to what you mentioned earlier, Joo-hyuk, I don't think Trump is aggressive, like a militarily aggressive person. I don't think. I think he likes peace. He's a what do you call it? The pacifist. Yeah, he's a pacifist. That's why he's so keen to do the ceasefire arrangement between Ukraine and Russia.
He wants to be the guy that brought peace. He wants to be the guy that settled things and cut deals, right?
But peace is war. That's what we learned in 1984, right?
Really?
Yeah.
I haven't read that book since high school, so I can, sorry. Which is 80 years ago, so I can't remember. Yeah. So anyway, what were we saying? So Trump, I don't think, Trump is, I think, is very keen to cut a deal. And I think so is China. I think it's just, what they are doing right now, in terms of all these news headline is a negotiation tactics. And, it's a anchor mentality. You want to start out at a very big number and then gradually kind of, settle, negotiate in the middle. So I think both sides are playing the same game. So I think in reality, at some point they will talk and come to some sort of agreement. And I don't know how soon that will come. Hopefully not too long. But if you assume that's going to happen maybe before the summer, then maybe now is a good time to buy.
Yeah, I agree because you said whoever blinks first, and I think when you look at it that way, the risk reward is skewed because whoever blinks first doesn't matter for risk. Like it's the blinking that is good because the
Yeah.
blinking brings certainty. So whether whoever yields, it's going to remove that uncertainty, like in a tail end scenario, and the whole thing, the distribution gets skewed like immediately. So I think immediately everything will reprice. And under so many scenarios, like I find obviously we've talked about it, but saying like inflation hedge and stuff, it's such a lazy, doesn't work all the time narrative. But Bitcoin can benefit there. Bitcoin can benefit in weaker dollar scenarios. There could be risk on environments conditional on like the liquidity situation, depending on how the Fed steps in. But I feel like there's a lot of these like ifs that each if is skewed very much towards upside versus downside, because we're in such a downside situation with all the uncertainty now. Any step made in all these different factors just brings a bit more certainty to the situation.
My concern is that let's look at Russia. What happened to Russia and Ukraine? The US and the whole world pushed on Russia with sanctions and with NATO and all, and they invaded Ukraine. They told the whole world they're going to do it, and they did it. I think we might see a similar situation regarding to China and Taiwan. So when they impose tariffs on China, I don't think China will want to come to the table, because coming to the table means they'll have to kowtow to the Western powers or the US, and they will want to get guarantees that might limit Chinese expansion to the world. But China wants that. That's like the one thing China wants to do. They want to be the hegemon of that region, which is Asia. So I'm not sure. Like, I think the logic circuit behind this is not economics. It's a power play. It's about power. When you have politics first in mind, economics comes to second. So I think, in my opinion, we should try to see what is the top priority for China in the US at this moment.
Yeah. I agree that we should see what the top priority is for China. And I disagree that top priority for China is not taking over Taiwan at this moment. I think their top priority right now is to stage a economic recovery. They've been suffering from economic downturn for the last 3 years. And if you look at the 2-year, 10-year Chinese government bond spread, it's never been lower. It's at the like a very long time low. The sentiment is really, really bad right now in China. So China is not in a position of strength either. And so that's why if you listen to the Scott Bessent's recent interview at various media, he talks about this as well, that it is true that the China is much more totalitarian society where people are more controlled and, under surveillance and everything. But at the same time, it's a huge challenge for the Chinese central government to maintain control over that vast territory with 1.34 billion people. It's much harder to control Chinese population than it is to control the US population, in my view, which is only quarter of the Chinese population. So one thing that I think the Beijing wants to make sure is that this economic downturn doesn't get any worse. Otherwise, you're going to start to see riots on the streets in China. And I think one thing, there's only so much they can take in terms of a hit from this trade dispute. I don't think there's much room. I don't think there's a large room. If the Chinese economy is doing great and everybody is having, the Chinese companies are making money, everybody's like, enjoying from the booms from their wealth effects, from the real estate market and so forth. Yes, they can engage in some sort of a trade war against the US and take some hit and still stay in the game. I don't think China is in that position right now after 3 years of economic downturn. So I think China also is playing a hard ball right now, but it's not they're not going to do it for too long, in my view. So I think at some point, if Trump can somehow provide a face-saving venue for Chinese leadership to come to the negotiation table, then I think it'll happen. And that's the intention of Trump. I think Trump doesn't want, deep inside, he doesn't want these things to get prolonged for too long. They want China on the table as soon as possible, and then resolve this. And I think a lot of people maybe who consumes too much Western media has this view that China is somehow this very evil nation that's like so keen to take over the rest of Asia. I also disagree with that view. If you look at how China is positioned, it is actually China that's been surrounded by all the U.S. military base within a very short distance. Like South Korea, for instance, is only 2 hours away from Beijing. If you install like a missile system in the South Korea, like imagine if you're Beijing, if you are the Chinese, like Xi Jinping sitting in Beijing, it's like so close range. U.S. doesn't have. The U.S. has a large oceans, like acting as a complete buffer against any kind of threats, whether it's a China or the Russia. U.S. has a huge buffer. So who's more under threat? Is it China or the U.S.? I would say it's a China. Surrounded by Japan, the South Korea, Taiwan, and then it's like completely blockaded by all these U.S. allies. So I think the threat, the military threat is completely. I think people have a misunderstanding. So that's my view.
Yeah. Well, we can extend on that conversation, but I think we're out of time today. I think it's been like 50 minutes. So I agree with that. I think I have some counterpoints, but I'll save that for later with a private conversation with Peter in another day. So I guess the conclusion for today: do not get too shaken by short-term action, and see what's going to happen between China and the U.S. And just hold Bitcoin, I guess.
Well, starting from you, Juhyuk.
Yeah.
Starting from you, not
You're gonna lead the
100%
way.
cash.
I love
That is
my dollars.
unacceptable.
I love my dollars. Thank you, everyone. This is the Presto Research Podcast. Goodbye.
Bye bye.
Bye bye.